That's excellent. Just do that.
Good morning. We're going to hand back to Andre to formally welcome, and we're going to switch to the slides.
All right. Wonderful. Good morning, everyone. My name's Andre de Toy, and it's an absolute pleasure to have you here from a chilly Cape Town, shall we say like that? We won't say that I'm chilly at the moment, but I just thought that I need a little bit of freedom from all the jackets and the blankets and everything like that. Penny said to me, I'm not allowed to speak any politics today or anything about what's happening. So, but I want to give you guys a quote that I came across yesterday, which just really filled my heart, and it was, if your eyes are positive, you will love the world. But if your tongue is positive, the world will love you. And that's all I wanted to say this morning, is that, you know, in difficult times, the best thing to do is to be positive and to look for those opportunities. And for me, this is one of those opportunities. Well, let me just quickly tell you, this is the second in the series, Master Your Money. 2 weeks ago, Penny was here and she rocked it. She was absolutely amazing. So I can't wait to see what she has to speak about today. The way that we're going to do it, we try to get through this as quickly as possible, 40 minutes if we can, to see what we can give you as much information as possible. So one of the things that Ken is going to do, so we're not deliberately muting you to keep you quiet, but this session is being recorded, and we want to make sure that the quality of the production is really, really good. All right, what else can I say to you? If you'd like to ask some questions, just please gather them together and save them from the end, because we're going to go quite quickly. It'll be nice if you've got a pen and paper with you, and just to make sure that you get a couple of notes. All right, on the left-hand side, you're going to see the Master Your Money presented by Penny Jones. As I said, I'll introduce myself now, the big positive guy. This is a taster of a bigger course that is happening on the 31st of July. And really, this is a decision that you have to make. And so we look at a whole lot of things. Today, we're looking at reducing your tax. Ken, you're making me dizzy with those slides. Next one. Next one, Ken. There we go. First of all, if you would like to make sure that you get all the information about the courses that are being offered, just go to your WhatsApp and send the following words, Money Penny, and send your name, so Money Penny and your name, to this number. It's a South African number, although my friend Penny is sitting in the lap of luxury in Mauritius. It's a South African number, so WhatsApp is for free. So just send the word Money Penny and your name to her, and what happens, she will make sure that you get hold of all the information. I see there's a couple of new people. I'm just clicking them all into the room as well. All right, next slide there, please, Ken. All right, today we're going to be speaking about taxes and investments. Now, these are one of my most unpleasant subjects and one of my most popular subjects. I think one of the things that we're looking at is to just make sure that we know what our things are. And I've seen Penny's notes, absolutely outstanding. Meet the team. Nothing like this happens by mistake. So on the left-hand bottom side there on the picture, you'll see Sarah Jones. She's been instrumental at getting all some of the computer side of things up. The heart is Ken Annandale, who is the better half of Penny Jones. And he's sitting behind the scenes pushing the buttons, so I'm not pushing the slides myself. He's making sure that it all happens, and he's doing an outstanding job. Bottom right, Natalie Annandale, creative genius who makes sure that all these slides and everything look fantastic. On the top right, you're looking at myself. I'm the big positive guy. I'm an actuary by training. I have been in the financial services industry for 25 years. But the last 15 years, what I've been doing is that I'm a full-time presenter and trainer. And I've decided to team up with Penny and just be her backup. She's providing most of the information here, but she's an old friend, and I trust the things that she says. And in the middle, that gorgeous blonde that you see from Mauritius, that's Miss Money Penny, Penny Jones. We're delighted to have somebody of such skill that is going to take us through this morning. So as I said, we're going to have two sections this morning. The first one is taxation. Don't switch off. Some of the things you're going to hear are absolutely crucial and are going to make a massive difference in your life. She's got 15 minutes. Penny Jones on taxation.
Hi, well, thank you so much, Andre, and welcome everybody. And thank you so much for giving us 40 minutes of your Saturday morning. And I'm going to get straight into it so we don't actually waste not even 1 second. And, you know, taxes is kind of like that type of subject where we all say, like, do I really have to pay these taxes? Well, yes, you do. It is what it is. And I'm going to run through a couple of ways that you can definitely save some money and reduce your taxes as much as possible. But first up, I'm going to start with a little mini quiz. So if you've got your piece of paper and a pen, I'm going to ask you some questions, and all you're going to do is write yes or no. That's it, yes or no. And the first one is, are you 100% up to date with your taxes, yes or no? Do you understand the advantages and the disadvantages of legal entities and tax, yes or no? Are you a taxpayer in another country, yes or no? Do you claim for every possible expense, yes or no? Do you keep accurate records of your tax returns, yes or no? Do you get professional tax advice, yes or no? Is your saving plan tax efficient, yes or no? Are you paying too much tax? We all feel that way, yes or no? Have you requested a tax compromise, yes or no? Is your estate planning tax efficient, yes or no? So how did you do? Let's see how we can help you going forward. So paying tax, none of us were probably happy about paying tax, but it is the way it is. Whether we like it or not, we have to pay tax. The good news is that with a little bit of knowledge, you can legally reduce your taxes and save hugely. Just go back to the slide, Ken. Just let me show. In South Africa, the South African Revenue Authority, SARS, we all know the term SARS, is responsible to collect taxes. It's an excellent department, and despite what we think, it is run very, very efficiently, and it does have teeth. And even during COVID-19, it is running efficiently, and they will collect. So it is necessary that you are tax compliant. And taxes change every year with the annual budget that's produced by the government. So what may be correct this year may be different next year. So it's important to keep up to date. In some cases, you do not need to submit a return. For example, if your annual earnings are less than 500,000 a year and other conditions apply, and you can have a look at that, discuss it with your accountant. However, what we find that it is better to file a return, as if you don't file a return, it's considered non-compliance, and that can affect other issues for you, like the credit rating, etc. So step one, we say register as a South African taxpayer. Step two, you need to submit a return every year, and this is called an ITR12 form. And during our workshop on the 31st of July, we'll go through that in a little bit more detail and give you some advice on that. And we say be compliant, but claim everything. You don't have to pay a lot of tax if you're clever. So right now, you might be saying, that's all well and good, but I owe a huge amount of tax, and I'm very, very not up to date in terms of my tax returns, etc. It's a nightmare. Then don't panic and don't lose sleep, because there is what we call the VDP, the Voluntary Disclosure Program, and there are consultants that can help you with a tax compromise if that's the case. So guys, knowledge is power. So let's just dig into some of the key points about tax. So the next slide is all about knowledge. Firstly, and I'm just going to deal with a couple of different areas in tax, not all of the areas like trust tax and donations tax and estate tax, etc. We're just going to talk more specifically about individual tax, tax as an individual and tax as a company, because I think those are probably the two most important and the two most relevant to us. So firstly, all of us, we're all taxed as an individual. And this is called your income tax. And your income tax equals your gross income, like all the money that you earn in a year, less your exempt income, and I'll come back to that, less deductions that are legally permitted, plus a taxable portion of your capital gains tax, which we'll touch on very, very lightly, but not in much detail today. Now, here's the thing. There are lots of sliding scales, there are rebates, and there are thresholds. So if this is not an area of expertise for you, this is obviously where you're going to get proper advice, and I'll come back to that. So the one sliding scale, the first sliding scale is your tax rates, and they can go from 18 to 45%. and deductions apply. So, for example, if you are earning in a year between 200,000 odd and 300,000 odd in a year, there's an exact figure, you have an allowed deduction of 37,062 rands, and you'll get charged 26% tax of the remaining portion. Now, if you are earning more than 1.5 million in a year, your deduction is about 500,000. That's legally allowed. Plus, you are going to get charged 45% of the taxable amount left over. So it's very, very important to know that these deductions exist. It's also very important to know that there are tax rebates. For example, if you're under 65 years of age, each year you can currently deduct about 15,000 Rand as a deductible rebate. And if you are over 65 years of age, like Ken, then you can deduct 8,000 Rand as a legally allowed deduction. So tax thresholds, there are also tax thresholds, and Ken and I make use of this. For example, if you are under 65 years of age and you are earning about 83,000 or so in a year, then you are not subject to income tax. If you are 65 years and above, then the figure jumps to almost 130,000 Rand. Now, Ken and I make use of this one, and I'll come back to how and why we do that later. And then, of course, there are deductible expenses, and we're going to come back to those deductible expenses that you can deduct. Then I've actually been asked by a couple of people that are maybe working in another country, how does that work? And it is important to know that there are double taxation treaties. And here again, you need to get proper advice on your personal situation. But if you are more, the tax in South Africa is a residency tax. So you need to be resident in South Africa. So if you are more than 183 days out of South Africa, you are considered non-resident. And at least 60 days of that have to be continuous. So I think I was hearing one of our delegates here today, she has a husband who is out of the country. Definitely this would apply there. So it's very important to have this knowledge. Then you've got tax as a company, which is a set rate of 28% of your profit. This is very, very important. Remember I said that, profit. And you would have to pay provisional tax 2 payments a year. Your dividends tax is also 20%. And you have a turnover tax. So if you're a startup company, we made a lot of use of this at the beginning. If you've got a startup company and you're currently doing under 1 million a year turnover, then there's a turnover tax that can apply. And that's very low. That's between 0 and 3% only. So that's definitely something you'd want to have a look at. If you have a company, you can put many of your expenses through the company and you can pay yourself a small monthly salary, which is under the tax threshold. And then you would pay 0 tax in your personal name and you would reduce the profits in your company. So this is very important. Then there are many other types of taxes, trust tax, donations tax, estate duty, capital gains tax, etc. So it's complicated. That's what I want to say. It's complicated. And this is why you need the right advice. Ken, can you just come and help change the slide here? So I don't try and know everything. I want to know just enough that I can ask the right questions. You need to put together what we call like a dream team, if you like. You need expert advice from your accountant, from your financial advisor, who are up to date with the current law and the government budget. We use a team called FinSolve, and they have literally saved us thousands and thousands of rands every year. It definitely pays to get proper expert advice. And there are so many legal deductions and exemptions that would apply to you, and everybody is in a slightly different situation. You may have a different set of assets, a different set of company structures, etc. And they look at the whole, they look at you, they look at your partner if you're married, they look at your family situation, they look at your estate planning, they look at your entire situation, and then they can give you proper advice on how to do your taxes. So don't try and do everything on your own. Please remember that. And then the next thing is let me just remind all of those people that have just joined us, welcome. It's fantastic to have you with us on a Saturday morning. We are rushing through a lot of information in a very short period of time, but please WhatsApp Moneypenny. There you see the number there, +27829208170, and we'll make sure that you get the relevant information going forward. So records, it's very important that you keep records of all your expenses, slips, bank statements, etc. It's not enough just to have bank statements alone. You're going to need copies of invoices and receipts and the workings out of what your tax situation is in a year, financial statements, etc. And you need to keep these for a period of 5 years. So if we're in 2021 now, just back it up 5 years. Anything older than 5 years, you can happily throw away and make some more space. So this is very important. I'm a little bit old school, so I tend to actually keep hard copy, but I also obviously embracing the future, and I scan receipts on a monthly basis, and I scan invoices, etc., and send to my accountant, which is very helpful because we're not in the same country. So, and even if you are in the same country, you might not be in the same city, so that really makes a lot of sense. It may happen that you are called in for a tax verification or a tax audit, and that's when these records are going to be extremely expensive if you don't have them. But bringing on to the next subject now, which is expenses. Now, this I love. We claim for everything, and make it a habit that you literally keep receipts for everything. And nowadays, there are apps that you can use which will consolidate all your receipts on a monthly basis, and you can send that to your accountant. It's also very important if you are in a job situation and you're paying PAYE, you know, it's especially helpful if you have a side hustle or two, and we were talking about that in the last session, because you can legitimately claim anything that is used in relation to the production of income. This is very, very important. It can actually mean that you're going to get some very nice and delicious tax refunds. And let me tell you, as efficient as SARS are, they're also very efficient in doing their tax refunds. And I've always been so delighted to get these refunds. Sometimes it just happens just before Christmas. I'm thinking, wow, that's really considerate. But you have to make sure that you've done your hard work in keeping all of these expenses recorded very, very carefully. And there are contributions that are tax deductible, your pension fund, medical aid, RAs, which are retirement annuities, provident fund. You can have up to a maximum of 350,000 rands a year in terms of these deductions. So you need to be making use of what you're allowed to deduct. Rather than, just think of it this way, rather than leave that money on the table, you are claiming that money back for yourself and your family. So what are some of the legal expenses that you can claim? Well, legal costs, wear and tear of your property, your assets, etc., your technicals, donations, some of the donations, especially to proper charities. Just be careful about that, you know, that you get a certificate of receipt. Repayable amounts, bad debts, this is a very important one. Travel allowance, car expenses, etc., travel expenses, subsistence and travel allowance. We use that one a lot because we're overseas. And then home expenses. Because of COVID-19, a lot of us are working from home, and there are expenses that you can legally claim for there. Look, we really claim for everything, but they say it's 20% of the total area. I know that the government is working on specific rules and regulations and directives that are going to change for working at home, because this has become a whole new reality, a whole new normal. So you can expect probably in the next annual budget in February next year that there's going to be a lot of changes in that area. But in the meantime, claim for everything. You may be in the type of work where you need to entertain and meet clients, etc. So you need to claim for those entertainment expenses. Personal image, Ken and I claim for that because we do a lot of webinar work. You know, we need to pay for hair. Well, Ken doesn't have to pay for hair. I have to pay for hair and image, makeup, clothing, etc. That's all deductible. Depreciation of assets, there's a whole sliding scale that goes together with that. And once again, you need expert advice. Then you also can get tax-free savings every year. The current rate is 36,000 Rand a year. And you can also have a maximum of 500,000 in a lifetime. But here's a little tip. You can actually also open savings accounts, tax-free savings accounts in the names of minor children. And this could be very helpful in terms of helping set them up for when they turn 21. They've got a little nest egg, etc., that they can use. So just as we're wrapping up this section on tax returns, you can do them yourself. To be honest with you, we have different structures, etc. I way prefer our team at FinSolve to do everything for us and keep us compliant. And of course, they send out reminders. Please make sure you've got this. Please make sure you've got that in good time, so that you're not late. Because if you're late with your tax returns, you have to pay a penalty. So you don't want to be late. You want to make sure that you've done everything timelessly. For your personal tax, it's normally the end of February each year that you're doing your tax. For your company, you can decide whether it's February or June. For our company tax, we've chosen the end of June just to keep it separate. And you'll pay provisional taxes for a company at least twice a year. Typically, we pay in December and in June. And again, once our financial statements are established. But what I also say is have everything double checked before you submit your taxes. I normally have a meeting and discuss it with our accountants and our tax advisors. And we come to a conclusion, this is what we're going to do for this particular year. And then we submit our tax returns and hopefully we can get some refunds. So I touched on everything so very, very briefly. There's going to be a lot more information on the 31st of July. But I hope that there's one or two tips there that's definitely going to save you some money on your taxes and at least give you some ammunition so that you ask the right questions. And with that, I'm going to hand back to Andre. Thanks, Andre.
Wow, Penny, what an incredible presentation. You have an enormous skill there. I made notes. I managed to get a whole page full of notes, but most of them are asterisks and remember this, remember this, remember this. So for me, that's absolutely fantastic. Obviously, on the 31st, you're going to expand a lot more on it. And by that, we mean that there are going to be forms and templates and all kinds of things that we need to do. One of the things that you mentioned that was the apps, Penny. I'm presuming that's also going to be covered in there because that's made a huge difference in my life.
Yes.
But I've actually sat here, and as I was thinking about it, there are more deductions now that I have than I've got income. So it's starting to sound quite good. But yeah, I'm very, very excited by the 31st. And if any of you are interested, the slide is up on the screen at the moment. There, it's on the 31st of July. It's the full Master Your Money course. We cover almost every single section of money in a lot more detail, but there's a lot of stuff that Penny has prepared that'll make a massive difference. We're going to take a short 1.5 minute break, so if you need to make a quick run, so this is your time. And we just talk you through that from 9 o'clock. Penny, we're running from 9 o'clock, for what time is the course running till? For 1 o'clock?
1 p.m.
1 p.m. The cost is 1,497. We've tried to make it as cheap as possible. These are difficult times. I think many people are struggling. So we've tried to chop it down as much as we can and to make it an absolute minimum. We've also given a lot of these freebies just to give you an idea of what's actually going to happen. But the next section for me is really, really exciting because that's the whole subject of investments. Because obviously, once we've made some money and we've paid our regulation tax, the next thing we need to do is say, how can we make our money start working for us? And Penny's just going to take us through for the next 15 minutes on investments, which she's actually going to do it for 10 minutes. And then what happens, I'm going to jump in and I'm going to help us on property and how you can make money out of property. And then hopefully she'll be finished in 20 to 10, quarter to 10 at the absolute latest. And then you can have a quick idea of whether you would like to come do the course. But it's wonderful to see so many of you here on a Saturday morning. It's chilly. It's been a difficult week in South Africa. And I'm glad to see so many of you here wanting to become better at what you do and also to increase that little bit of cash that we've got in our wallets every single month. Penny, anything from your side that you would like to add before you start your next section?
That's it. We're just going to take a quick 1 minute breather and we'll be back in a minute.
Fantastic.
And we're back.
Fantastic. Penny, I was just thinking there's no way to understand money better than to have a child. Because sometimes it starts with something as small as a money box, and when you put the money in the money box, and I keep explaining to my daughter, if she saved 10% of her money or 20% of her money, by the time she would be 30 or 40, she wouldn't have to work again, and she looks at me in absolute horror. But I think sometimes we know the truth, but sometimes we just don't apply it. And I think hopefully that you're going to show us some of those great financial truths, which are true throughout the years and throughout our lives. So ladies and gentlemen, after a wonderful session on tax, on investments, we have Penny Jones.
So who wants to be a millionaire? And everybody puts their hands up. So we're going to start off with a quick quiz. This is such a popular topic, and it's my as Andre says, this is our favorite topic to talk about. So yes or no, are you investing your savings? Yes or no? Do you understand the power of compound interest? Yes or no? Do you invest in what you know? Yes or no? Do you exercise caution and investigate potential scams? Yes or no? Do you know what tax-free savings are available to you? Yes or no? Do you understand the power of 72? Yes or no? Do you invest time in learning about investments? Yes or no? Do you invest in property? Yes or no? Do you invest in businesses? Yes or no? Do you invest in stocks and bonds? Yes or no? Whatever your answers, even if you've not yet started on your investment journey, it's never too late. That's the good news. It's never too late. So start today. But for those of you that are under 35, oh my word, you guys are definitely in the power seats. So first off, as with the tax, it really pays to get advice. What you're going to need to do is to put together a dream team. You need a decent accountant, a lawyer, a banker, a broker, and an insurance professional. Money affects everything that is important to you and your family, so choose your team wisely and build trust with your team. This team should, if they're the right people, they're going to be together with you for the rest of your life through this journey. And choose professionals with excellent track records who really want your business and they want to work with you. Share your financial goals with your team so they understand what it is that you want to achieve and what are the timings of that. And what are your risk tolerances? If you are very young, you might be happy to have some very, very high risk investments. And if you're older, probably less so. And there's nothing wrong with a tortoise plan, very slow and steady. That's still going to get you to where you need to be. And get advice from millionaires. I mean, Andre is one of my millionaire friends. I love getting advice from him. He knows so much. And he's going to speak a little bit later on in this session, and you definitely want to take lots of notes. And as I say, it's never too late, so it's better to start now than never to start at all. There are 3 key investment principles, and the one is diversification. Never put all your eggs in one basket, remember that. Number 2 is transparency. You need to be able to understand and follow your investments as they are being placed in the market and begin to grow. And number 3, disclosure. You need to see updates on the progress of your money and regular statements that are cross-checked and audited. And this will help you definitely avoid being involved in anything that's not upfront and legal. So let's talk about key money-making principles. So the first one is compounding and the power of compound interest. So when you are saving your money, you are adding to your wealth. But when you compound your money, you begin to multiply your wealth. So 1 becomes 2, 2 becomes 4, 4 becomes 8, 8 becomes 16, 16 becomes 32, etc. That's the magic of money working for you. How nice does that sound? So compounding is the 8th wonder of the world, but you have to get it to start working for you instead of compounding working for your credit card company or your bank. You will probably find that your first million that you make is probably pretty much 100% your effort and your hard work and tears. But the second or the third million could well be money that's working for you and it's doubling on yourself. So another very helpful formula that you need to know. And now you're looking at me and you're saying, Penny, no, maths on a Saturday morning, no. But this is such a simple formula, and this is going to help you with your investments so much. And that's the rule of 72. So we use this formula to determine how long will it take to double your money. So we were talking about compounding now. This will help you understand it better. So you divide 72 by the rate of return you are receiving or anticipate receiving on your investments. And that's going to equal the number of years for your money to double. So for example, if you have a mutual fund and it's growing at 12% per annum, it's going to take you 6 years for your money to double. So 72 divided by 12 equals 6. So what if you were earning a 20% return? Then it's almost like the number of years halves to 3.6 years. But what if it was a 50% return? Then it could be 1.4 years and you're doubling your money. So you're understanding the process now. Okay, so what about if it's 10%? Then it's 7.2 years. Or if it's only 5%, which is sometimes what you can only get at the banks, that's 14.4 years. So you can understand you're going to need a long period of time for that to really start kicking in. So how can you invest so that you get better returns? And they always say invest in what you know. But on the low return side of the scale would be bank investments. And there the advantages are that they're very, very secure. But the more lucrative gains can typically be found in property investments and other investments like that. And here I'm going to hand over quickly to Andre, who is an expert in this field and could take an absolute day or 2 or 3 to highlight his best tips. But he's got 5 minutes. Andre, over to you for 5 minutes.
I've never said anything in 5 minutes. I'm going to try my best. There's only 4 ways in which you can make money. You can work for it, and that's hard because you've only got a little bit of money left. The second thing is you can start a business. And once you've accumulated all this money, you've invested it, and you've looked at the power of 72, the next thing is that you can do some investment. But there's a very powerful tool, and that's the one of property. And property is one of those wonderful things where sometimes you can bypass the system where you don't have to save the money first before you can actually make it. So there's 2 real ways that you make money in property, and you'll find that almost every single billionaire has an enormous portion of his wealth tucked up in property. And the reason is there's 2 ways that you can get the cash. The one is the actual property itself has something called capital growth. It becomes more valuable. So if you have a R1 million house and it makes 10% in a year, the next year you've made 100,000 Rand. That's 8,000 Rand a month that you have to save. It's almost impossible to do that. And that's why property remains one of the best investments. The other thing is also rental income. And I'll teach you a couple of very quick and easy formulas when you can do the course, where rental income can become substantial in terms of the property that you're actually letting out. So that's another nice thing that you can do. So let's quickly discuss some of the types of investment you can do. One of the most common ones, and I'm sure all of you have heard about this, is where you buy a property and you let it out. And the golden secret is to buy the property where your repayments are as close as possible to the amount of money that you're getting as a rental. Now, in years to come and in times in the past, and I'm still finding properties where I can buy a property for R1 million, pay back 9,000 Rand to the bank and let it out for 10. That's like a gold mine because 2 things are happening. Number one is I'm breaking even almost immediately from day one, but I've got capital growth. So the R1 million property is worth 5% next year, and I'm making 50,000 Rand a year. And here's the secret. It's not my money. It's the bank's money. So the bank has given me the cash. And so we've sat and we played. And recently I took a lady and we took it through. She had 800,000 Rand in cash. We managed to buy 4 properties, put down deposits that all 4 properties are actually paying for themselves. Here's the secret. She says, but where's the cash? Where's the cash? But the reality is the 800,000 properties are escalating every single year at a capital growth of anything between 5 and 12%. And that's where she makes money. You cannot make that kind of money legally anywhere else. Some of the advantages that we have, the biggest advantage for me is that there's this wonderful thing about we're making capital growth on money which is not ours. But on any of the expenses, we can use them as tax deductions. So it's one of those wonderful things. If it's not going fantastically well, you put in a little bit of money, almost all the money that you're putting into the property is tax deductible. And that for me is probably one of the biggest gifts that we've been given. Here's a little secret, and if this doesn't make you buy a property, then nothing will. If I have R1 million worth of stuff, here's my stuff, it's worth R1 million, and I say to you, can you buy this for 800,000? You'll say to me, but Andre, you can't buy something worth R1 million for 800,000. But property is one of those things that you can. You can do it in 2 ways. The one is you can negotiate strongly. You also don't know if the person is under pressure to sell. They've been divorced, they're getting divorced, they're leaving the country, they've been transferred. So very often you can buy a bargain in terms of property if you're prepared to take some time and look around, and you can buy something and instantaneously make 200,000 rand of the profit. Again, try work that out how much you have to save per month to make that kind of money. The second thing is, can you buy a property and make it more valuable? And the answer is absolutely. So you'll often find people will not buy the best house, especially when it comes to investments. We'll buy the house where the swimming pool needs a little bit of work, where the garden needs some work, where we can paint it. So we buy the R1 million house for 800,000, we spend 70,000 rand on it, we zoot it up, and we make 130,000 rand immediately. Third thing, can you buy a R1 million house? Here's my R1 million house. Can I buy it for $1 million and make it worth substantially more in a very short period of time? Well, yes, I can. Because very often I can buy that, put in a new kitchen, put in a garage, and suddenly make it worth 1.3, 1.4 without having to spend the 300,000 or 400,000 rand. Property is one of those long-lasting gold mines. One of the reasons I love it, it's very hard to lose substantial amounts of money. We on some investments like shares and things like it, you literally can lose your money in a day. Property is very, very stable. If it does go down, it might go down by 5% in an absolute crisis. But the reality is the underlying asset is something physical and it stays there. There are lots of very interesting kinds of property that we can play with. We can also, if you say, listen, I don't want to buy my own property, what we can do is we can play with property shares. There's all kinds of mechanisms available in the moment for us to make property. Tax advantages are huge. I know of one building last month that sold R1 billion worth of apartments in it, purely because there are multiple tax breaks that the government is offering us at the moment. I'm sure my 5 minutes are over, but I just want to say to you, one of the most exciting investment portfolios that you could ever get involved with is property, and there's nothing nicer than opening up your statement of assets and liabilities and looking at your assets and seeing multiple properties, and all of them are making money for you while you sleep. Thanks, Penny.
Thank you so much, Andre. That was fantastic. I was also taking so many notes. So that was excellent advice in the area of property. I'm going to quickly touch on stocks. And Andre was saying, yeah, be careful. If you don't know what you're doing with stocks, you can definitely lose a lot, but potentially there are very, very high gains as well. So investing in stocks, you need a stock broker that you can work with. And you need to look at a mixed portfolio, maybe of high risk, medium risk, and low risk items. And you know, often we just go with unit trusts that are packaged for us, but be very, very careful, because sometimes the commissions on those are very, very high. So your return is not going to be that great. I've always been recommended to look at index funds. Historically, index funds have done exceptionally well over a long period of time. So definitely ask your broker about just a basic index fund that you can get started in straight away. And also invest in companies that you believe in. And then monitor and manage your stock investments on a regular basis. And that's just very, very briefly. We'll cover stocks in a lot more detail on the 31st of July. But moving on to businesses, investing in businesses. Now, this is something that Ken and I have focused on. Because the value in the business largely is when you sell your business. That's when you get your return on investment. And people often ask, well, how do you actually calculate the value of your business? They say you take 1 year's turnover and then you times that by 3. So, for example, if your annual turnover is about 3.5 million a year, it's a small business, times that by 3, then the value of your business is probably around 10 million rands or so. And you would use a business broker to assist you in selling your business and keeping tax in mind, of course, when you're working out the details of the payment structure. But you can then use that money that you make from the sale of that business to invest in other businesses, or to invest in properties, or invest in other investment instruments. So a tip here, if you're planning to sell your business, then you need to build a business with systems, etc., that are not dependent on you. And it also needs to be free of personal loan debt and sunk costs, etc. So definitely discuss that with your business broker as to how you can structure it, so that in a couple of years' time, you might be ready to sell your business. And then as we wrap up this very quick session today, let's just talk very quickly about other investment opportunities, and also just a warning about cons and scams and false investments. And unfortunately, there are many, many scamsters out there who are happy to make you huge promises. They're going to give you this return, that return, the next return. and it's going to be emerging funds. And guess what? These funds never emerge. So be very, very careful. And remember that, Maxim, right at the beginning, we spoke about diversify your investments. Don't have all your eggs in one basket. So if you do get caught in one thing, it didn't work out the way you thought it would, you're not stuck. Will Rogers is famous for saying, I am much more concerned about the return of my money than the return on my money. Avoid lotto and gambling. Take that money, rather put it into something that's safer and more secure, and you're going to start seeing a decent return. We haven't even begun in talking about investing in stamp collections and art or other collectibles. And these are fascinating opportunities to grow your assets. And in some cases, like with a stamp collection or art collections, it can be very easy to move around, especially if you need to move country. And always remember that there's nothing wrong with playing safe. Tax protected investments like retirement annuities, etc., is a very safe route to follow, that you will definitely see the results. So as we have seen, the balance between earning and saving and investing, there's a balance. There's a balance between profit and showing expenses for tax protection. And this is all the game of mastering your money. And there are several interlocking pieces, and that's what we're doing on the 31st of July. We're inviting you to come and learn about 10 critical interlocking pieces that together are going to help create your secure financial plan for you and for your family. So join us on the Saturday, the 31st of July, for a 4-hour Master Your Money workshop. Tickets are only 1,470 rands and are available from Quicket. Details will be sent to you. We'll be supplying you with templates and essential documents. We'll be unpacking in a lot more detail these critical elements, and we're going to help you get organized and stay organized with your financial plan. So in conclusion, I just want to say your future, the future of those that you love, the future of the causes that you care about, and the future of those who will be confronted with your legacy long after you are gone, hang in the balance. Please don't miss this opportunity. Thank you so much for your attention today, and I'm going to hand you back to Andre.
Michelle, you've got such a good question there. Penny, somebody just asked, is this tax deductible? Of course it's tax deductible, but it depends on what you're doing. It depends how you structured yourself and whether you're a business or an individual. So fantastic question. And those are the kind of questions that we're going to answer. Now, in the last two Saturdays, Penny has covered 4 different areas. And these are only 4 of 10 that there are. I want to say something that's quite brave, that the difference between people who have money and people who don't have money is generally just knowledge. It's the understanding of some of the basic rules and how to get access to funds and how to turn those funds into more. It's very often not about working really, really hard and working yourself into oblivion, because the reality is most of the money we spend on working, we end up spending as well. So there are ways to become rich, and there are ways to become comfortable, and there are ways to secure our futures and get out of debt and all kinds of things. But you need to know some of the rules. And so I think this is one of the smallest investments by somebody who's actually practiced this, who's done most of those things that I said about, with being working for somebody, doing businesses, investing, and having multiple properties. And I always admire Ken and Penny, who've driven, value-driven, and ended up in a scenario where they're actually sitting in a place where they're exceptionally happy. Don't lose out on this opportunity. I think it really is a once-in-a-lifetime thing. This is not something that we're going to be running all the time. I've pushed Penny to say, let's run this course. I think there's a huge need. I have in the last month interviewed 50 people. I'm a radio presenter as well. And one of the things I've done is I've interviewed people and said, what is the primary thing that is concerning you during this time of COVID? And the number one thing has been money, money, money. There's nothing worse than being absolutely dependent on somebody else, on some business, or something's happening, or you're spending all your savings, or you're behind your taxes. This is this one opportunity for you to catch up. So it's nice and easy. You can either WhatsApp Penny on that number that we've got, and Ken, if you've got that number, just bring it up again. You can WhatsApp Master Your Money with your name to Penny, and she will make sure that you get all the details. But the other way of getting to do this, go to Quicket. Quicket, it rhymes with ticket, quicket.co.za, and where it says events or anything like it, type in Master Your Money, and what will happen is it'll bring up all the details. It will send you an electronic ticket, and it will send you reminders, and on the day they'll be sending you WhatsApp through Quicket. So make sure that you go to quicket.co.za, look for Master Your Money and register there. And be nice, invite a friend, because you might just be doing them the biggest favor of their lives. Penny, thank you so much. Anything from your side?
Thank you so much, everybody, for your attention. We're going to stop the recording now, but we're going to invite you if you would like to stay, and we can answer any of your questions just for a short while. We're more than happy to do so. So we're going to stop the recording now.